next speaker. And one of the things that, like always, is that we want to bring on the experts to go ahead and teach you guys the skills that you guys need to be developing to get you to that next level. And so with that being said, let's go ahead. Let's bring on David Russell here. David Russell is the VP of Market Intelligence at Tradestation Group. He's drawing on 2 decades of experience here as a financial journalist and analyst. His backgrounds include working at Bloomberg News, CNBC, and E-Trade Financial. So thank you for coming on, David, and excited to have you on.
Hey, Mitch, it's great to be with you guys. Good to see everyone here. I want to quickly first, I think, start with sharing my screen. Excuse me.
And so what are we going to be talking about today? What's the topic? Because it looks like we have what stock traders should know about the futures. I'm super excited to find out about this. Reason why is that a lot of traders learn about, overall market, intraday. They're looking at what's going on, momentum stocks, this indicator, that indicator. But a lot of people don't take the time to learn the futures. So I'm glad that we have you here today, David. So let's go ahead. Let's dive right in.
Great. Well, let me just first quickly just go through some really quick disclosures. This content is for educational and informational purposes only. Any symbols, financial instruments, or trading strategies discussed are for the demonstrational purposes only and are not research or recommendations. Tradestation companies do not provide legal, tax, or investment advice. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There's a possibility you may sustain a loss greater or equal to your entire investment, regardless of which asset class you trade, equities, options, futures, or cryptocurrencies. Therefore, you should not invest or risk money you cannot afford to lose. Online trading is not suitable for all investors. Visit tradestation.com/important information for a copy of the document characteristics and risk of standardized options before trading any asset class. Customers must read the relevant risk disclosure statements on our important disclosures and information page. System access and trade placement and execution may be delayed or fail due to market volatility and volume, quote delays, system and software errors, internet traffic outages, and other problems. Tradestation Securities Inc., Tradestation Crypto Inc., and Tradestation Technologies Inc. are each wholly owned subsidiaries of Tradestation Group Inc., all operating and providing products and services under the Tradestation brand and trademark. You Can Trade also is a wholly owned subsidiary of Tradestation Group Inc., operating under its own brand and trademark. Tradestation Crypto offers to self-directed investors and traders of cryptocurrency brokerage services, is neither licensed with the SEC nor CFTC, nor is it a member of NFA. When applying for or purchasing account subscriptions, products, and services, it is important that you know which company you'll be dealing with. Please visit tradestation.com. Important information or further information explaining what this means. Any examples or illustrations provided are hypothetical in nature and do not reflect actual results actually achieved and do not account for fees, expenses, and other important considerations. These types of examples are provided to illustrate mathematical principles and are not necessarily meant to predict or project the performance of specific investment or investment strategy. Accordingly, this information should not be relied upon when making an investment decision. Okay, so I wanted to quickly start off by sharing a couple of things with you guys. First of all, I have a zip file for you guys who are Tradestation customers. I wanted to share this with you guys because this will allow you to access some of the. Let me see how I actually link this. I have some links here I want to share with you guys. I don't actually see how I can paste them in. So I'm going to just move on from this. But basically, I have a zip file, and we'll find a way to share it with you guys after. But what it essentially does is it provides you a workspace that will allow you to see a lot of the tools we have. And one of the things I actually do also, I'll just quickly show you now, so you see where some of my work is. An easy way I can actually share this with you guys is if I just go right now to tradestation.com. This is, if you go to our main site here, and if you go to Research Insights, this is the Market Insights blog that I run. And what I'm going to do is, in a day or two, I'm going to post a little article that highlights what I've done here, and it will have the zip file as a link in there, so we don't have to worry about that right now. So let's quickly get back to the presentation. The main thing here is that, why do people want to think about actually trading futures? And one of the things is, I think in a market like this right now, more than anything else, there's a real benefit to futures because of things being so correlated. When we're in a bear market, we're in a period of intense volatility, things tend to move together. And as a result, simply being able to trade the S&P or the NASDAQ can make a lot more sense than trying to trade individual stocks. And and by trading futures, it allows you to basically take advantage of those kind of moves and not get tied up with the individual, oddities of individual stocks in a market like this. One of the things that's most interesting about bear market like this is it very often your good stocks will actually do worse because people own them heavily. So simply buying good stocks doesn't always make sense in a period like this. Things like Apple or Tesla or AMD, they might have good earnings. There's a lot of positive things about them, but everyone owns them. So when the market gets hit, they can go down more at times, and other times they don't. Sometimes one stock will play catch up to another, and it's really just kind of very difficult to pick and play with individual stocks in a bearish sort of market like this. But when you focus on some of the things that futures offer, it can allow you to overcome that. So first, I wanted to just start off by explaining something about how futures work.
Hey, David, I just
Uh,
wanted to let you know I threw up those links in the chat there for you so they can click on it now. They should be having it
oh,
able
great.
to be clickable. So just wanted to let you guys know. Keep it going, David. You're killing it.
Thank you, Mitch. Okay. Now I started like most people as a stock trader and traded a lot of options, and one of the things that I want to just explain off in the very beginning when we deal with futures is that they work differently than stocks do and ETFs. It requires a different kind of account type. And this might be obvious to some people, but some people don't know this basic fact about futures is that you don't really own a futures contract. You simply go long and short a futures contract. So the way it works is that you have a certain amount of capital. Say you put $10,000 into an account, you go long or short. The account will gain or lose value based on what the product does, and each product has a different value. So for example, the S&P futures, if you go long S&P E-minis and it goes up 1 point, you're going to make $50, and you're going to lose $50 to downside, and vice versa. That's just how it works. It's not like you own, if it's 4,000, you buy it and it goes up one, you make like $1 or $10. Each futures contract has its own relationship to the underlier. For the S&P, it's 5 points. For the NASDAQ, it's something else. For crude oil, it's something else. You need to know those basic specifications before you touch that, and you need to understand that they work differently. I'm going to very briefly kind of just point to a few of those things in this, but I want you to understand the most important thing is that this works differently than stocks and options. You don't own a future. You basically are long or short the future, and then that impacts your account. And you need to have a certain amount of capital up front called the margin to open that position. And then you need to have, there's an initial margin and then a maintenance margin, which is, if you enter and it goes against you a little, you have some leeway before your before your position has to be closed. These are some real mechanical things that we don't have time for now. I just want you to understand you're dealing with something that is different. The differences are important, but they're not that terribly hard to learn and to understand. And once you kind of have them under control, you can really learn to start to use futures. So I want to just emphasize that off the bat is to realize that it's going to take a little bit of a learning curve to get started, but it's something you can read about and get under control pretty quickly once you understand the way that they work with long and short, and with margin. All right, now let's going on here. Let's look at the actual sort of potential benefits of the CME index products, which are the main things we really want to talk about here, because CME offers a series of products that allows you to capitalize on a market like this. Because don't forget, we have a market right now where crude oil's been moving. I mean, I don't know if anyone's paid much attention to the dollar, but there's stuff happening now in the currency markets that we have not seen in a decade. The Forex markets were dead quiet for a long time. And in the last 3 to 4 to 5 months, we've seen incredible movement in the currency markets, and that's something you can also capitalize on with futures. So these are some interesting things that are happening now. So with futures, they trade pretty much round the clock between Sunday night and Friday afternoon. So the good thing about that is, on Sunday night, one of the first things I do, 6 o'clock Eastern time, I start looking at the futures, having an idea what kind of week are we looking at, and the movement starts at that time, and then it runs through after the close for most of these products on Friday afternoon. Now, each product has its own hours, its own schedule. They stop trading at certain times during the day. Again, those are things we're not going to get into, but the thing is that you can find all that information when you look at some of the links I'm going to provide here. In the zip file that I'm going to share, you actually can get these slides and you can actually you could find these if you look at them off my screen and kind of Google them. But if you look at them, tradestation.com, if you actually just go to our navigation, you can go through pricing and you can find the margin requirements. Now these change, but they're on our website. And then CME also gives a lot of this information. If you just Google CME, S&P future specs, you'll find your way there. It's not very hard to find. All right, so that will give you also, their schedule, when they trade and things like that. So one of the good things about that is that, the market can move, obviously, when, the American normal market between 9:30 and 4 is not open. With futures, it gives you the opportunity to react to things like that. That can be useful with the S&P 500. Now, what's interesting is look at, for example, Friday. I'm going to show you this on a chart in a minute, but on Friday, that CPI came out at 8:30 Eastern, and the market moved, and it never caught up in the normal trading hours. That move was completely and totally in the futures market. And if a person was trading futures, they could have capitalized on that. And if a person was stuck in equities, the SPY gap lower, everything gap lower. So Friday was a good example of that, and I'm going to show you that. So, a lot of us might trade things like the SPY or the QQQ. These are the products that are going to track the big indexes. And I'm talking about the S&P 500, the NASDAQ 100, the Dow Jones Industrial, and the Russell 2000. Those are like your four big indexes. And those have things like the SPY, the Qs, IWM, and the diamonds. So if you're going to trade those in the options market, you open up an options chain, and there's a lot of ways you can navigate through them. And it's not always, the hardest thing to do, but there's a lot of contracts that, should I go for, this strike or that strike? Should I do this expiration or that expiration? And there's a lot of ways you can pick these, and there's definitely ways you can do it correctly. But the thing is, it's a lot more to think about. And if you just think, I think S&P is going down now or it's going up now, and I want that simple directional exposure, that's where something like the S&P futures can allow you to easily step in. So you don't have to pick the option strikes and the expirations. The other thing that's nice about them is in the last few years, CME has started introducing micro contracts, which are 1/10 the size of the traditional contracts. So traditional S&P E-minis are going to move $50 per point. The new ones move 5 per point. And as a result of that, you can scale into positions more easily. You can buy 2 or 3 contracts and then buy another 2 or 3 contracts. It's easier, to sell half your position, for example. So for risk management, it can make things a lot simpler. These micro contracts have been incredibly popular, and I'm going to show you some of those. And then the other thing is, some of the things at TradeStation is that you can automate things with futures contracts, and you can do that with equities as well. But the real bread and butter of automation are going to be the futures contracts, especially things like S&P 500, Dow Jones, and things like that. So if you want to just look at some of these links here, I will be sharing them. All right, I'm going to just keep moving here. So this chart, this table, this basically shows the big indexes. Now here's what's important. You have your S&P, you have your NASDAQ, your Dow, and your Russell. You'll notice that for each of these, you have a relationship: $50, $5, $20, $2. These are how much they move per point. Now remember, you're looking at the points. So something like the Dow Jones Industrial Average, much bigger value. So the contracts move differently. So you need to know these things when you're trading, because this is how essentially your return is going to, come. It's not based on just the points itself. You have to know the multiplier or the point value per tick and per point. So this is an important thing to know. Now, the thing about these is, another thing about futures is that, like options, they expire. They have different kinds of expirations. Crude oil is monthly. Different gold is like the next 4 months, and then they have other expirations into the future. All these you can read on the specs page. The S&P, the 4 big indexes expire quarterly, and we have an expiration on Friday for quad witching. It's one of the 4 things. So it's always good to know what are the contracts in question. So you'll very briefly show you that the main route like the kind of basis that we start with is like a root ES. It's like when you look at an option symbol. It's the same sort of thing. We have a root, which is ES for S&P 500, and then we put in a month, which is M for June, U for September. And if you could Google, for example, futures expiration months. I have like a piece of paper up on my wall that I just know every month. It's really simple just to look at that. And then we have the year. So with this, you're able to very quickly just jump to the contract and know where you are. So it's if you're going to be trading individual products like ES and things like that, it's just always good to know when the expiration is. At this period of time, we're seeing more volume shift, for example, from the June contracts to the September's. These are some of the basic mechanics you have for futures that they matter around the periods of expiration, and another time it doesn't really matter. In another week, everyone will be trading just September, and then that's just the way it goes. It's just these little things that are kind of just basic mechanisms of the market that you need to know about, but they're not a deal breaker. Just know when they're happening, and just realize that volume will be leaving June and going to September. And here are the related ETFs for each of them. I list down here as well the expiration month codes that actually matter. So basically, right now, I mean, you look at like what we've been seeing with the sell-off in the market this year. A lot of the weakness was really starting in things like the Nasdaq. People can simply trade something like NQ, which is the Nasdaq 100, and that's a way to basically manage your way through rising interest rates and all the other things that have been weighing on the tech sector. That's basically right there going to give you exposure to the entire Nasdaq. Now, these are just other products that I want you guys to just kind of roughly know about, because we're now in a real macro kind of driven environment. For years we were just like FANG stocks. It was, Facebook and Amazon and these big kind of growth names. We didn't worry about or think about oil very much. We didn't think about bonds. We didn't think about currencies. Gold was doing nothing. It was just all about stocks. The economy didn't really matter that much. It was just kind of going along. It was Goldilocks. No one cared about, Russia. No one cared about, these macro conditions. Now we're in an environment where the macro conditions are pretty big and they're hitting us on all these different fronts. This 75 basis points expected from the Fed today and everything else. So in that environment, stocks in many ways can be thrown around by all these different forces, and you might be in a spot where you want to be active in those other areas. Especially the situation, with oil right now, um, things like currencies, like I mentioned, and you can access those in the futures market as well. Now, this can be really useful for futures, and one of the reasons I'll mention this is that something like crude oil. I mean, when there's an OPEC meeting, that news normally comes out around 4 or 5 Eastern. And if you want to trade something like USO or XLE or oil stocks, those are going to be following long behind. So if you're interested in trading things like oil and stuff, that's where the future is going to give you that access. There are the currencies as well. Um, the thing about something like trading them with futures is that it allows you to access it through a normal kind of traditional brokerage account. There's different, other implications for taxes and things as well you might want to look into. But the benefit of that something like this is, like I said, if you look at some of these currencies recently, if you look at the euro against the dollar, I mean, we could be at a point here where the euro is on the verge of a breakdown. It could have an interesting run. There could be some opportunities here where the S&P could be kind of bottoming and chopping around and things like that. And you might see all the movement could be in the foreign exchange market for a certain period of time. Another thing that obviously is what's been happening in the bond market. Well, there are 4 different products that track the treasury bonds, and these are the roots for each of them. And now I'm using these roots like TU for the 2 year, and then gold is going to be GC. Now these are the roots, like I said here. All right. And then what you would do is you would build the actual symbol around that. So like I can show you right now. I'm going to go to my Tradestation workspace here. And this is Tradestation. This is the actual platform that we use. And I wanted to kind of show you the way that let me just quickly, sorry. All right. So these are the generic symbols here. But we could say something like, I want to see gold for June, and it's GCM22. And that's how you build it. And this is the contract. Now this because we're in June, and now the expiration for gold is a different day than than the S&P. There's not a lot of liquidity here. I'm not really sure exactly what's happening with this one, but I wanted to just show you that's how you actually would create it. So again, when you're going to be trading these, you want to go and spend some time reading the specs, knowing what the current on the run contract is, and a lot of that information is on the CME website, so it's really kind of useful. Now I just want to show you some of the actual things here with the actual trading of these. I created this workspace just for you guys here in this presentation, and right now we're looking at the Dow futures, for example. ES is the main thing that I watch. There's various reasons for that. One of the things I've just kind of noticed is that the ES is really the S&P is in many ways just kind of the dominant index. There's times when tech is bad, but people want to put money to work in the market, and then you'll end up with things like consumer staples and real estate and utilities going higher, and the Nasdaq doesn't have any of that. And so the thing is the S&P will give you a diversification between these sectors that you're not going to get in the other indexes as much. And I think that's an important thing to realize is that when people say, when they just hit the button and they say, I want to allocate money into stocks, which is how big institutional decisions are often made, it goes essentially to the S&P. And the thing is, if you're over focused on something like the Nasdaq, and that's in a weak spot, you might see all that money just go into healthcare, and then the Nasdaq doesn't participate, and then you see the S&P is up. So S&P is where I really believe we should be kind of focusing. So what do we have here actually on this chart? There's three things in this workspace I want to show. This is radar screen on the left, which is one of TradeStation's most kind of popular products. And what this does is this allows you to have a series of indicators and values and different symbols. By me clicking on a symbol on the left, it's linked with these little green buttons. And this is going to show me then a 15-minute chart, and this is my 4-hour chart. So this is kind of giving me my longer term view. So we're looking at the main S&P here. There's a few things I'm going to maximize this now, and this is something that I wanted to kind of just show you guys here. What do we have on this chart? So what I did is I added a 200 period moving average for a 15-minute chart. Now this is going to give you a long sort of view of when allowing you to see potential turns. So like from my perspective, the signal would be areas like this when you start to see you start to see it behaving and forming a trend around the moving average, building support above the moving average. That's kind of the signal. And here as well, when you start to see the real breaking beneath it, and you can see that it's spending more time underneath it, that also gives you a direction as well. And here we are at a period here where we're going to be trying to figure out what's kind of happening next. So that's the one thing I have here. The next thing is the stochastic. Now, stochastic is interesting because I set this up to work more like the stochastic on an hourly. I made a longer kind of time frame. And this is also something that can kind of give you some signals that when you start to see, the movement higher, it can kind of start to signal you into when a potential move is happening. Like for example, this was making lower highs, and then you can also see that if you want to be positioning to the downside, when it comes back off the oversold condition, that is where you start to get at least the the odds kind of working in your favor. You want to be kind of looking for the you want to be coming off some kind of low to be going long, like an area like this. It kind of pulls back and start to see it shifting back up. It just kind of gives you a little bit of a directional sort of signal, and at the same time, it also can kind of give you a sense that this is maybe at least an area where you don't want to initiate a new position. It can go down into an oversold position for a long time, but the key thing is that it kind of gives you a sense that especially on the upside, when you're at a period where it's kind of overbought. So this is just a useful sort of way. There's a million indicators you can set up on trade. Well, not a million, but there's many indicators you can set up on TradeStation. The other one that I really want to point to and that a lot of futures traders use is VWAP. And people use it for day trading stocks as well. Volume weighted average price. And what it does is it estimates based on the actual volume in the market where the average price is. A moving average like a 50 period or a 100 period will simply look at the price history in the last 50 bars and average it out. but it doesn't adjust for where people have actually been trading on the session. So the thing I like about VWAP is it also draws these channels. And I think some of the areas is just some of the kind of signals that people might be able to find for something like VWAP. Like this is an area where you can see it draws the channels and it kind of holds the channel. And this would have been like a signal of it coming off the lows. The thing here is interesting because you can see where it holds above the VWAP. And this is, something of a potential bullish signal. What's interesting here is you can see it starts to make lower highs and you can see where it fails at the VWAP. And this is also a kind of signal that's interesting. What I think is interesting about this as well is you can notice how it kind of, when it's going along the channel of something like VWAP, you can see that there's periods when it's going to stabilize. But by watching this channel, it's going to actually kind of give you a sense, if I want to be long, this is maybe not the best place. I mean, if I want to be short when you're following a trend, when you're pushing that channel, it gives you a point of reference for reversion into the channel, into the trend, where then you might actually have an opportunity. So if a person had simply kind of waited and, resisted, wanting to be, this was actually, I wanted to show this to you guys. I'm going to really quickly zoom in here. This was Friday. So this was basically, where was I'm sorry, Friday morning. Sorry. This was the CPI on Friday morning. So anyway, you can see how it basically, the whole explosion lower happened and then the market opened right around here. But the key thing about something like this, let me zoom back out with VWAP is it can give you a sense of not chasing and waiting for a reversion into a channel, and the channel is going to kind of keep up and it's going to base itself on the average price that people are trading. So VWAP is another useful thing to look at, and like I said, this workspace I'm going to be able to share with you guys on my blog. So those are just some of the really quick off the bat kind of tools. I want to show you that this is something like crude oil. Now, something like crude oil, remember, this is going to trade monthly. There's periods of time for something like crude oil when it's going to, have things like oil inventory reports, which came out today. Those come out usually at 10:30 Eastern on Wednesdays, but when there's a holiday, it moves. And then we also have things like OPEC meetings. Other things, I think Biden's going to be going to Saudi Arabia. He's doing some Saudi Arabia soon. That's going to be an impact on oil. So these are the sort of things that, when you kind of know about these can also kind of be things that you can use if you're looking to trade things like oil. Just realize that these products can be kind of complicated. They behave differently than equities. And, you kind of need to know what you're getting into when you do things with them. All right. Let's just see here. I have some, let's see, these are gold, same sort of thing. I think when we look at something like gold now, it's interesting to me in gold because if you look at long term in gold, it's trying to hold a long term level at 1800. The last things I really want to show you incredibly quickly, I am running out of time, are two tools on Tradestation that make it easier. We have our quick trade bar that you can link up. Now I'm going to change this to something like, ESU22, because you cannot trade the generic symbols. The generic symbols are going to basically link together each contract that expires over time, but it's not a real product. It's just for charting purposes. ESU22 is the real product. So what I'm going to do is I'm going to put on my symbol linking. And now by doing this, it's going to force all these to actually be on the September contract. This is just a simulated account I have, but you can quickly trade right off of this quick trade bar. And the other thing that people use a lot is Matrix. The nice thing about Matrix is that what this allows you to do, and this is also ESU setups are the same thing, is that I'm going to change it to ESM22. With Matrix, this is now the contracts of this week. You can see where the volume has traded on the day, so people can buy and sell off these buttons here, or you can actually place orders right off the Matrix. And the interesting thing about this is, like I said, you can see in the day the volume bars where the activity has been. So these can all be linked back to your chart, or your radar screen, so you can be clicking on one of these and it will automatically populate into matrix and everything else. So these are just a lot of the tools we have here. Futures trading is our bread and butter here. So the last thing I'll just say in conclusion is just to remember, volatile markets, things move together, and things are correlated, and trading indexes can be simpler for a lot of people to get their head around than playing around with individual stocks. If the market starts to rebound and one or two stocks you think are good, those might not move in your favor. They might sit there as the rest of the market goes up. So in a volatile market, it's volatile down and volatile up, and focusing on the big indexes can really just make your life a lot simpler. So it's great to talk to everyone. I'm not sure if I had any questions, but again, please go to tradestation.com, go to the insights at the research at the top, and go to insights. Look at my blog, and I'll have this for you later in the week. Thank you very much.
Yeah, thank you, David. I really appreciate you coming on. Like you said, everyone go check out Tradestation. Dave, we've been working with Tradestation for a while. Great company over there. David, thank you again for hopping on the Benzinga Bootcamp today.
Thanks, Aaron.